Bitcoin, Ethereum, and Solana hit their highest prices in over a month as we enter a week that will feature Ethereum ETFs going live and Donald Trump speaking at the world's largest Bitcoin conference. We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. Nick, how are you this weekend?
Really good. You had it right there at the title, Trump speaking at Bitcoin conferences. Never thought I'd see the day, and really eager to see exactly what he proposes, whether it's going to be more of the same or whether he throws a spanner in the works and mentions this idle Bitcoin that the government's holding on to. So a lot to unpack there. Perhaps get into the markets. I know we've seen some positive inflows recently.
Yeah, it was another green week in the crypto markets. It's hard to believe Bitcoin was at 54,000 US not too long ago, and here we are at the highest prices in around 5 weeks. As I get up on my screen here, this was led a lot by the Bitcoin ETF flows, and you can see the 7-day price action. BTC up about 9%, ETH's up 6%, and even Solana is up 20%, even though a lot of the focus has been on Ethereum from a news standpoint, which we'll get to soon. But quickly to the Bitcoin ETF side of things, a 6-week high in terms of weekly inflows. So yeah, it was about $422 million US dollars or so in weekly inflows, and remarkably, the total accumulated sort of inflows since the ETFs have gone live in January is now topped 17 billion, which is quite remarkable, and it just shows that these ETF issuers are continuing to accumulate Bitcoin off the open market or maybe off of certain miners that they've got deals with. But yeah, to think we're here is quite crazy.
Definitely. And what about, I guess, the stock market? I think I noticed a decorrelation with the stock market, and it looks like the few of the biggest stocks in the world have taken a bit of a tumble.
Yeah, we've talked about, I think one of our worries in a way was, crypto was continuing to sort of languish, throughout May and even June, while stocks continued to soar to all-time highs. There was some crazy stat. I think we said that the NASDAQ or Dow Jones, one of the indexes had hit all-time highs like 30 or 40 times so far this year on a daily close. And all the while, crypto was languishing behind. So we've seen, thankfully, that weakening correlation. I think our big fear was that if there was a big crash in the stock market, would that translate to a crash in the crypto market? But thankfully, that weakened correlation was the same to the downside. So we saw stocks correct and have their worst market cap loss in 2 years. That is the Magnificent Seven stocks. So that was last week, really painful week in the stock market. But thankfully, that weakening correlation with crypto held true. As we just discussed, crypto had gone up quite a lot last week. So yeah, thankfully there we've seen that period. So it's a weird thing, this correlation with between stocks and crypto, as we've spoken about. There are periods where it's very tight, the correlation, and oftentimes over periods of months where it's quite weak, which is definitely what we're going through at the moment. And just quickly to wrap up Bitcoin's price action, just this morning actually, on Monday Australian time, we've seen news come in which we'll get to just very quickly to talk about the crypto implications of this, but Joe Biden dropping out of the US presidential election. And 30 minutes after that, we saw Bitcoin drop about 1,500 in price, US dollars that is. But in the hours after, we've seen prices go back up to, again, highest prices in around 5 to 6 weeks or so. So, we'll talk about this soon. But I think if I'm really to zoom out and talk about the current market situation, it's to expect some more volatility because we're definitely seeing an uptick in it in recent days. But probably the biggest news last week, Nick, we'll get into this, and it's all about Larry Fink, or the CEO of BlackRock.
Yeah, this was a really interesting interview he did with CNBC, and he really talked about why Bitcoin is a legitimate financial instrument and asset. So he's come out before and had these, reversal of opinions. Of course, BlackRock's famous for becoming a big player in the Bitcoin ETF space. BlackRock themselves are diving into tokenization, deploying, their build fund on Ethereum, which we talked about last week in the pod, went to about 500 million in value locked in that product. He just come out and said some probably his most bullish words yet on Bitcoin. I'll just quote here what he actually said. He said, "I was skeptical. I was wrong about Bitcoin." And he believes that Bitcoin is, quote, a legitimate financial instrument that allows you to have uncorrelated returns to the market. He also went on to talk about how it's this asset that you hold and you're a bit frightened. And he said that, quote, when you believe countries are debasing their currencies by excess deficits. And he then went on to talk about how Bitcoin has a role in major portfolios, and Bitcoin is one of the things that he talks about a lot. And he just famously said that, hey, he was wrong, and he really played the bullish case for Bitcoin, which I never get tired of hearing these Bitcoin maybe imperialists now that they're talking very positively about it. But these were people who were very, very anti-Bitcoin. Fink had that famous quote that he just equated Bitcoin as an index for money laundering back in, I think, 2017, 2018, during that big bubble. So I think he's pretty much completed his backflip 180% there. So not what you should make sure this there, Matt, but major shift and kind of more of the same. I'm just really excited to see big names like this, and Jamie Dimon's probably the next one that if I'm crossing off my FUD bingo list, Larry Fink was there. Now Jamie Dimon's the only one now that has to do this backflip.
Yeah, for sure. I think, as we said, he's talked bullish about crypto this year, but this was definitely, in my opinion, the strongest case he's made for Bitcoin. And he actually spoke about it, it felt like at length. The mainstream media, it was about 90 seconds or so, or even 2 minutes. Whereas previously he's talked, about, blockchain, tokenization, very loosely, pro Bitcoin. But this one was definitely, really stood out and will be quoted for years to come, I'm sure. We'll talk about just a quick, as we touched on earlier, we saw breaking news in the past few hours to do with an election update with Joe Biden pulling out of the race, and now a new Democratic sort of presidential candidate will have to be confirmed. We saw a lot of volatility, as you expect. The market, hates uncertainty. So this definitely ramped up uncertainty, and therefore we saw, as we said, Bitcoin sold off even, and all other cryptos, and then we saw a big rally afterwards. Again, by the time this podcast comes out, and even in a week from now, there'll probably be more confirmation of who the Democratic leader is. But in terms of, what this means for crypto, I don't know, it's still a lot of new. I would be shocked if the Democrats came out and, really all of a sudden became targeted crypto to say they'd work with them and maybe lessening or softening their anti-crypto stance. I'd be happy if that happens, but I'm not sure. What are your thoughts on that one, Nick?
I think you hit the nail on the head. It's, as we talked about, we try and stay apolitical here. It's not really about who is in and, which party it is. It's all about how it impacts crypto. So that's going to be the main thing to see whether they do pivot and try to open up to the industry a bit more. And this could allow the expedited process of passing some of these market structure laws that are rumored to be swirling around in Washington at the moment. So this is where it really matters, because if you come in with an easing of the crypto, harshening rhetoric there, perhaps it's easier to pass some laws inevitably, even if they don't, make power. Because we all know that at the moment it's pretty difficult for two parties that are locked to pass anything tangible. And we've experienced that in the crypto industry, unfortunately.
Yes, I know there's a lot of advocates this morning. You're really tweeting and on social media trying to use this as an opportunity for the Democrats to change their tone. So, look, we'll see if that happens. But yeah, we'll be covering it in the upcoming podcast for sure. All right, that is over to the Republican side of things. And Donald Trump reports out that if he was to become president, and Jamie Dimon, the CEO of JP Morgan, so essentially one of the most powerful people on the planet, really, same with Larry Fink, that Trump's thinking about him nominating Dimon as the treasurer. So when we talk about crypto side of things, the treasurer in Washington DC, they're one of the most, I suppose, powerful figures in, I guess, and have the most influence of the future of crypto. I think we saw a few years ago there was all fears about crypto being wiped out with Steve Mnuchin. Back in the day, I think 5 years ago, it was really hostile against crypto. Janet Yellen she's been a bit more ambivalent with Gary Gensler taking the spotlight over the SEC. But if Jamie Dimon became treasurer, wow, that seems to be very bearish for crypto. But I think a big detail here for listeners and those watching, a big thing here is not misreporting, but I think misrepresentation. I think what the original story, it came out of an interview where the interviewer was sort of mentioned Jamie Dimon And so it was sort of a leading question in a way. Like they mentioned Jamie Dimon and then asked about whether Trump was going to be considering him for treasurer. So Trump sort of said, oh yeah, of course. But like, he's one of many people. It's not like Trump came out and like announced like, oh, Jamie Dimon's being considered for treasurer. So that's really important there. And if Dimon is selected as treasurer, it's likely in this case, he's going to have to drop his really anti-crypto stance. But for those unaware, Jamie Dimon is arguably been the strongest and the biggest villain of crypto over the years in terms of just, his criticism of the space and, being in such a powerful position already as CEO of JP Morgan. But if he became treasurer and kept that stance, it would not be a great look for the outlook for crypto. So definitely watch that space. But first things first, Trump has to be elected yet. First things first. So, and on that, we've sort of got an update on who is chosen as his running mate.
So we have JD Vance here, and he's actually a Bitcoin holder and quite a big Bitcoin advocate as potential vice president if Trump does win. So that's just rounding out, I guess, how the US presidential election is going to impact the crypto market, because we're seeing continued, even at the VP level, pro-Bitcoin candidates and advocates take the helm of those important positions that hopefully can guide some proactive Bitcoin policy and crypto policy more broadly.
Yeah, exciting times there. Over on the Ethereum ETF front, we haven't even spoken about that, and that's definitely going to be the biggest story of this week. So I'll let you take it off, Nick.
Yeah, can you believe it, Matt? It looks like it's finally here, which I think at the start of the year, we were definitely in the camp of not expecting this to happen. At July, at the earliest, we were probably anticipating maybe a end of the year, next year type of thing, but it's come around pretty quickly, and we're seeing potentially dates being thrown around now with probably 99.9% confidence at July the 23rd, maybe 24th, when the real flows start to come in. And this was driven by the CBOE and some of these official exchanges starting to give listing dates. We're still yet to hear from the SEC in terms of confirming all of this 100%. So we're still kind of waiting. Maybe after the pod comes out, more details might emerge, but all signs are looking like that July 23 date is pretty locked and loaded, and we should see big ETFs trading by the next pod. So keen to dive into the impacts here. And we even have the fees have finally come out, which I really took a big notice here because Grayscale is one that's been talked about a lot. We saw huge outflows stem from the Bitcoin ETF, which kind of made the picture look a bit more murky when you're looking at flows. And that was the big question, is are Grayscale going to kind of correct their high fee environment that might result in less ETH being moved out of the trust and being sold on the market? And they come out and they essentially try to have their cake and eat it too. They're keeping the same trust at a high percentage, but they're introducing this new ETF product that has a lower percentage, the lowest percentage, I think, of all the issuers yet. So they're trying to kind of keep any of the flows leaving the trust, but they're trying to absorb any new money if they do want to leave. So one to watch, Grayscale. I don't think it's a big deal here, Matt. I know we talked about it before. Maybe you can shed some light to the listeners about why maybe the Grayscale outflows might be a bit overblown.
Yeah, if you remember early January, as you said, I think that initial sell-off, when Bitcoin ETF, it was buy the rumor, and it was eventually looked at as buy the news. But I think on the day they launched, it was sell the news, because a big reason why like the ETF launch caused Bitcoin to sell off a lot was because, I think a lot of people were seeing the Grayscale outflows and getting really like fearful that the ETFs might not be super popular. But one bit of information, there's a lot of reasons I think why the Grayscale ETH product won't be as relevant this time around. I'll just touch on one of them, and that's just the lack of forced sellers. So I think it was Genesis and Three Arrows Capital, or the estates or administrators looking after their bankruptcy. They had to sell the GBTC as soon as possible, so on day one. And that was a big reason, and they were big holders of GBTC. So that led to a lot of outflows initially and that scary chart that you described, Nick. So they're not present in this scenario with the ETH product. But there's other reasons as well. But essentially the lowdown is the Grayscale factor won't really be there this time around.
So what do we think in terms of the price? You talked about how when we saw Bitcoin ETF launch, there was actually a sell the news event in the days, but it kind of didn't last long, and it was very short-lived before the market come roaring back, and we saw the real impact of the flows take, effect. Do you see a similar thing? I'm probably in the position that, as with the Bitcoin one, I posted to members, I think it's a buy the news, buy the rumor. I think it's hard to overcomplicate things, and you want to keep it as simple as possible. And in this environment, I'm probably feeling the same with ETH, that actually ETH probably has potential to have maybe less relative outflows. Like, I don't expect it to have more inflows on a relative basis than Bitcoin did. I even imagine that it might be smaller to the downside, maybe closer to the 20% versus the 30% that a lot of people are expecting. But I expect that maybe the impact might be greater. And this is just because there is about 40% of the ETH supply that is either in collateral, in DeFi, or it's actively staked. So it's not easily movable, although it can be. And it's just a less liquid market than Bitcoin. So I'm anticipating potentially the price impact could be better or bigger over the next 3, 6, 12 months as that spot buying really takes hold on the Ethereum price. And if we do see network uptick and the burn increasing, this could have a significant, kind of differentiating impact than we saw with Bitcoin.
Yeah, there's an abundance of factors that are like so different between this launch and the Bitcoin ETF launches. For anyone wanting more information, we spoke about this like 2 weeks ago in a bit more detail. But yeah, one thing we didn't speak about, but I think it's very relevant when you're talking about price impact, is, well, obviously markets are based on expectations and forecasting what may happen and pricing it accordingly. I remember the sentiment around the time of the Bitcoin ETF. It was very optimistic about even the estimations. Yeah, it's funny, even though this year the ETF, flows have blasted past estimates, I still remember the sense of like a lot of optimism at the time. And that may have been why we had that sell-off on that day, because everyone saw a hint of outflows and they're like, okay, this isn't looking anywhere as popular, but it proved to be quite popular. Whereas this time, I get the sense that a lot of people, I'm not going to say it's as strong as the ETH ETF launch is going to be a flop. I think that's putting it too harshly, but I definitely think it's more tempered, the expectations of, and then therefore, why does any of this matter? Well, if the market is expecting the ETFs to not be super popular at the start, if there's any sign that they are indeed, hitting the mark and actually seeing a lot of demand, that could definitely cause a re-rating in price. So I suppose the reasons why price could go up, you need to pass a benchmark that's pretty low. Again, what am I basing this on? It's really just sentiment out there. I just get the sense a lot of people aren't predicting and expecting too much of these ETFs.
I would definitely agree, because Ethereum has a much lower sentiment than Bitcoin.
Yeah.
Bitcoin is, that legitimate thing that no one is not afraid to, make predictions about, whereas Ethereum doesn't have that level of confidence in it. And there's even a lot of threats that are being attributed. There's Solana that's been really rising up the market cap, that is taking a lot of the attention away from Ethereum. We even had what Bitcoin had with Ethereum, where they were going to have a flippening. We were even seeing discussions the same with Solana, whether Solana is taking all the attention away from Ethereum, whether all these L2 talks are kind of being detrimental to Ethereum, saying that, hey, maybe they're not as beneficial as initially thought, and they're capturing more value and kind of leaking value compared to Ethereum. So I would say Ethereum sentiment is reaching, quite lows relative to such a big ETF launch, which is something to watch, Matt. I think it's a great point that, wonder if institutions come out and embrace ETH, whether that's going to totally set it on fire and help us enter that next stage of the bull market.
Yeah, definitely. And even just rounding it out, I suppose another way to look at it is, I suppose, the downside. At least in my opinion, the downside's pretty capped when you're talking about if the ETF is quite a disappointment in the first week or two. I guess what I'm saying is I don't expect ETH to correct by that much, but that's just my prediction, and we'll see what happens. Moving on to Mt. Gox, definitely has to be spoken about in this podcast, because we've been waiting for it for about 10 years, and finally they started to move Bitcoin, and it will be sold on by exchanges. So as I go up on my screen here, I guess the gist of it is about 35% of the funds, that's around $3 billion US, worth of their total amount that needs to be sent. That's in Bitcoin, that is measured in. That has been sent to the likes of Kraken and a Japanese exchange, and then those two entities are responsible for then, paying out creditors. So that should take, I think Kraken is saying allow for up to 14 days maximum. So we should expect to see these payments being made to some individuals, importantly, over the coming days. And then over the coming months, I would expect that total figure of roughly $9 billion worth of Bitcoin to be fully, I suppose, in the hands of individuals, or at least the vast majority of it. And then even at that stage, we probably won't be talking about it. But yeah, very significant. And we saw also just on that selling pressure, just very quickly, we saw Germany, that state in Germany actually came out with a press conference sort of confirming that they had sold all of their 48,000 and something Bitcoin. There were rumors that maybe they had given it all to some market makers and they were going to progressively sell it off over the weeks ahead, but that was sort of put to rest there. So they were saying they just had to sell it as part of, I guess, regulations to do with it being a volatile asset. So yeah, that sort of closes the book there on the German selling.
Perfect. Maybe we can even link to our last newsletter where we talk about why that selling may not be as bad as we all may think, especially as the headlines may suggest.
Yeah, for the Mt. Gox, definitely. You should definitely check out that newsletter.
The final thing we got here is a big exchange. Well, the biggest exchange in India was the X. They were hacked for $235 million, which really to me is just a reminder of the increase of risks and scams as the bull market continues. We haven't seen these levels of hacks of major exploits on whether it's DeFi protocols, whether it's centralized exchanges. For the last couple of years, it's been a bit quieter, but we're starting potentially to see these ramp up. So even if your own personal security, I would definitely recommend just brushing up on your own personal security. I know for one that with all the airdrops that are going on, a lot of data that's been leaked, everyone is kind of on that watch list, if you own crypto. So make sure to protect yourself out there because we'll probably only experience an uptick in this sort of activity. I know Chainalysis did a bit of a deep dive this month and they found that, crypto scams are just on the rise again.
Yeah, great point there. And it doesn't look great for India. Just very quickly, I think given their top 5 size of economy in the world, they've always been a big opportunity for crypto, but unfortunately been anti-crypto for the most of the past decade. Periods of neutrality, but I would say that at the end of the day, they're anti-crypto. And unfortunately, with this hack of one of the largest exchanges, if not the largest in India, unfortunately, it'll probably give the powers that be more ammunition to, I guess, come down against crypto. So we may provide any more updates if that progresses. But moving on to altcoins here, and it was quite a week in the altcoin market, but definitely the biggest news came out of Polygon, which confirmed that the migration from the Matic token to the POL token, POL, is locked in for September the 4th. So I did the math on this, Nick, and it was 420 days from the day that they proposed the Polygon 2.0 upgrade to September 4. So 420, I don't know if there's a bit of a meme, like a bit of a crypto sort of thing there by Polygon, but could just be coincidence. But yeah, it just shows how long some of these upgrades can take.
It's the one we were waiting for, and unfortunately came a lot longer than we anticipated. And even still, this is only in name only, really. It's a surface level, changing the name from Matic to POL, Polygon, the new token. And this doesn't change any of the fundamental utility to the token just yet. So this will require further, community governance approvals to change any of the core utilities, which they did explain in that series of posts about Polygon 2.0, that POL is going to be this new token that starts to secure a lot of these, burgeoning chains and what's built on what's called the AG layer, just this unified kind of abstracted layer where all this value lies, and you don't really have to bother when, toggling all these different chains and moving between all the different Polygon infrastructure and supported networks. You kind of just go through this one AG layer, and the POL token there is meant to be this sort of thing that helps drive productive power to the chain and maybe provides a bit more utility. And also, I think the thing here is that the token supply does not change just yet. that was one thing that was very controversial with this move, that Polygon was going to go from Matic, which was capped and a lot of the supply was entering the market, to Pol, which kind of introduced a potential 1 to 1.5% inflation forever. So that's one thing that is on the governance approvals list, and hopefully we have a bit more to report in the coming months.
Yeah, for sure. We could talk about this particular upgrade for a very long time. I think the last thing I'll note quickly is just how they are going to be using it for staking, as you said, Nick. So the Pol token used for staking, very different to, I suppose, the roll-ups like Optimism and Arbitrum, where those tokens are at the moment purely governance tokens. So the OP token and the ARB token, I think there's been talks that they may add staking eventually, but Polygon, I guess, will be among the first major ones to be adding that staking functionality. So we may talk about that further in our shift list update coming up this month. Moving on to Base, and yeah, they had their on-chain summer starting to heat up. Was there anything that caught your eye there, Nick?
Just the proliferation of their new smart wallets. This was a new feature that Coinbase has introduced, this new smart wallet, which is different to the Coinbase, the wallet extension that was similar to MetaMask. It's this new type of wallet that tries to abstract a lot of these complexities to using crypto wallets and creating seed phrases and signing your wallet and participating on on-chain transactions. This has been a big push for the Coinbase team to spread knowledge of this new wallet, this new sort of infrastructure to start using on-chain. And yeah, we've seen that the metrics are really showing something here, with rapidly appreciating above, I think, 300,000 or 200,000 accounts in the last month or so. So rapid adoption of this new wallet, and that's all thanks to the ongoing Coinbase on-chain summer, which I think, again, we've said it time after time, but it's hard not to be really positive when you're seeing the biggest exchange in the US, really proliferate their infrastructure, providing new abstraction that can help ease the usability, which can be really tough for new people using cryptocurrency. And then just that they're building on Ethereum, and their Base is now, I think, a top 3 chain behind Optimism and Arbitrum in terms of activity and TVL.
Yeah, moving on to Grayscale as well. So, they're not an altcoin inherently, but they came out and shared a bunch of news that was related for sure to 5 particular altcoins here. So Near, Filecoin, Render, LivePeer, and BitTensor. So they're all now, I suppose, constituents or whatever they call them, as part of the fund that Grayscale has just announced. So that's the Decentralized AI Fund, where essentially if I'm an accredited investor, so noting there, they're only available to accredited investors, but they'll be able to buy, I think, shares of this fund, and that will, indirectly result in Grayscale having to, I guess, buy more tokens, if I'm not mistaken. So Grayscale back in the day launched some of these, but it's been a number of years before since they've launched like a sector specific or a themed sort of fund where you can involve multiple tokens. So yeah, I think the vast majority of that, as I've got up on the screen here, Near is about a third of it. Filecoin is about 30% or so. So they're the 2 most popular ones, but the other weightings you can see there on your screen.
Perhaps looking forward in the coming weeks, Matt, a few things I've noted here is Elon Musk, is he cooking up something? Was swirling on Twitter just today that he changed his Twitter or his X profile picture to laser eyes. You reading into any of this, or do you think it's just a bit of nonsense? Or I know Musk has been a pretty high profile figure back in 2021 when he committed to buying Bitcoin for SpaceX and Tesla. Is this going to be a return to adding Bitcoin to the Treasury sheet, Matt?
I won't go that far, but I'm happy to be surprised there. There was rumors though, I think this morning, as after he did those laser eyes, I think the CEO of Bitcoin Magazine also, tweeted out some speculation that he may be coming, or something that led people to believe he may be attending the event in Nashville, so Bitcoin 2024, which we'll get to soon. But then I think that tweet eventually got deleted also. So look, there's a lot of speculation going around, and yeah, we'll see if that laser eyes is directly related to something to do with Bitcoin, or if it's something else to do with Biden, who I think also did laser eyes famously a couple of years ago which was for some other reason. But we'll see what happens. Musk has been very mysterious about his thoughts on crypto over the years.
Perhaps the biggest thing outside of the Ethereum ETF to look forward to is, of course, Trump speaking at the Bitcoin 2024 conference. I think it starts July 26th, goes to about the 29th. I hear that he's speaking on the last of these days at the conference. So the big thing I'm looking for here is, hey, will he just repeat what we already had he said in public statements and what we talked about in the pod last week about this new GOP policy stance of crypto, of self-custody, of providing market structure, of no CBDC, or will we come out and make a high-profile policy statement of not moving these 1% Bitcoin that the US government currently holds? That would be a small thing that would definitely move the market because, hey, 1% that will not move under a 4-year Trump term, that's a pretty bullish statement, and that goes further than just repeating the kind of rhetoric that is already discussed. So that's one thing I'm looking for. More of the same. I don't expect it to really move anything, but if he does mention anything around, that strategic asset, then I think all bets would off, and that could definitely trigger a serious rally that we may not be expecting.
Yeah, for sure. I think even at that conference, he also has a fundraiser, I believe, where I think the minimum cost to enter that side event is like $900,000 US or something like that. It's a fundraising thing at the same time. So we may get some heavy hitters attending that event, and maybe news comes out of that as well. But yeah, I would say over this coming weekend, definitely is a chance of some volatility, I suppose, to say the least, in the crypto market. In terms of what we thought was overappreciated or underappreciated last week, I'm going to go this week with underappreciated. It's funny because I'm going to talk here about the fact that meme coins. So you could say, well, everyone's talking about meme coins, so it shouldn't really be that much of a surprise. But at least it was a surprise to me in the sense that we had 9 meme coins for the first time, I suppose, since crypto markets have existed. There are now 9 meme coins in the top 100. So it's been a lot of talk about meme coins, but I was surprised to have seen the fact that they've grown this big so far this year. And as I've got up on my screen here, this time last year, there were 3 meme coins in the top 100. So we've had a tripling of that in 12 months. And yeah, it just goes to show, I suppose, the stage of the market and just how far meme coins have come in 2024.
Yeah, that's a great one, Matt. I noted as well, I think they represent about a 2+% sector dominance now, and that's been up since 1.5% that I've started tracking that metric. And I actually wouldn't be surprised to see if meme coins have a higher weighted sector dominance in AI coins. May not or could be. I know they had more than DeFi, which is kind of hilarious that they found.
Yeah, we're pretty close for sure, I suppose, with AI. But I suppose flipping from meme coins to something on the other side, what did you see this week, Nick?
Yeah, I'm going to take a bit more serious approach here, Matt, but I love the meme coin activity there. Looking at State Street, which is kind of a big, I think, Boston-based asset manager and big financial services company, they're looking at creating a possible stablecoin that may be related to tokenized deposits. I've been noticing last year, MasterCard did a lot of research and development on their website talking about tokenized deposit as a next big unlock in what they're looking for. This is one I'm kind of got my finger on. I wonder if we actually see it or whether it's just kind of they're saying that they're getting involved or eyeing something off, but not really doing anything. So this is one that I've got on my list to watch carefully. And it kind of builds on the underrated news that we saw in the last couple of weeks with people like Fireblocks, who have expanded their global custodian program to have some names such as Zodia, which was linked to Combank and their custody program. So Fireblocks really expanding their global custody agreements, and hopefully we start to see some of these big actors such as State Street get involved in stablecoins and tokenized deposits.
Yeah, good find there. Always plenty going on the institutional adoption side of things. But yeah, that is a wrap for this week. A big week ahead with Trump, of course, speaking at Bitcoin 2024 and the likely launch of the Ethereum ETFs. If you are looking for more insights, we mentioned the newsletter in this podcast, a great reference for a lot of the most topical things happening in crypto. You can go subscribe to that. It happens and delivered free every Friday to your inbox. You can subscribe to that at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.